George Soros went from being a refugee to being worth over $7 billion, and he's most known for the event in 1992 called Black Wednesday, when Soros made $1 billion in a single day and broke the Bank of England. This would make him vilified, and indeed today he is hated by many people. The left sees him as a greedy speculator that profits off of the destruction of others, whereas the right sees him as the master manipulator behind endless progressive causes. But when Soros started his journey, he was just a poor Jewish refugee fleeing the Nazis. I mean, there's not a more sympathetic character. So how did Soros go from literally $0 to $7 billion? Let me get that out of here. And how did he go from a victim of war to being one of the most hated, vilified, and most powerful men in the Western world? Well, to understand that, we need to go back before the war. See, this is the 1930s, Budapest, Hungary. This was a thriving city back in the day in the interwar period. It was a former hub for the Austro-Hungarian Empire. This is the place that Soros grew up in. His father was a successful lawyer who was a prisoner of war during World War I. He got to see the rise of Russian communists firsthand during the revolution, and he escaped and came back to Hungary. So Soros's father had seen how everything can change in an instant, and indeed Budapest, Hungary was going to change quite a bit because, of course, World War II began and the Nazis arrived. When the Germans arrived, they began handing out deportation notices to Hungarian Jews, people just like George Soros and his family. These deportation notices are a death sentence in disguise. And so Soros's father reacts fast. He sells all his real estate, he spreads his family out across the country, they use code names in public, they even refuse to let the children see a doctor because the doctors would know that they were Jewish and turn them in. So his experience coming out of the Russian Revolution, his paranoia, his quick thinking allows him to survive. And because of these actions, the Soros family makes it all through World War II. Now, after World War II, many Jewish teenagers in Hungary are incredibly traumatized by the events. They bring guns to school, even. But a young George Soros was not traumatized by the war. In fact, something else had happened. He'd become addicted to risk, to peril. He described the years of the war as the happiest of his life because he got to see his father save his family and help his community. And so in this time, Soros begins to develop these messianic fantasies about saving his people and saving the world, just like he saw his father save everyone. Now, okay, I know what you're thinking. You're like, oh, whoa, how does he make $7 billion? Like, who the hell cares about his childhood? This is all directly relevant. It shows his psychology before he started trading and before he started investing. Before he could make that $7 billion, things got worse. I know, how could it get worse than the Nazis? Well, it does. It's the Soviets. So after the Nazis were defeated and left, the Soviets were in charge of Eastern Europe. And there's a horrific event where Soros's mother is beaten and sexually assaulted by 2 Russian soldiers. Decades later, Soros would be credited with helping to bring down the Iron Curtain and helping to end the Soviet Union. And that motivation directly started here when he was powerless to help his family. Because right now, he's just a poor Jew. He needs to free himself. He needs to free his family. They need to get out of the Soviet rule. He needs money, and more importantly, he needs power. And so, in 1948, George Soros leaves for the West. He arrives in London and works as a waiter. In fact, he is so poor, he's saving money by eating the scraps off of the customers' plates. But finally, George Soros gets his big break. He gets accepted to the London School of Economics, which is a big deal. Many world leaders have come out of this school. And there he studies under the famous Karl Popper, an incredible philosopher, who teaches him that perfect knowledge is not attainable. That's incredible spelling right there. That's just gorgeous. Perfect spelling is not attainable, apparently. So Karl Popper teaches him that perfect knowledge is not attainable, and that everyone acts based off of their imperfect understanding of the world. Yeah, okay, this is all great, but when does he make money? Well, this is all directly relevant, I promise. After graduating, he sends a letter to the managing director of every single bank in London, and he gets a job working as a trader in gold and stock arbitrage. Now, this is a business where you're looking for the price of gold or stocks in one market, you're looking at the price of the same gold or the same stocks in another, and if there's a difference, you're trying to make a quick buck. So he's got an in finance. There's just one problem. He sucks at it. He's not good at this job. And so just after 2 years, he quits. He's out of there. Despite studying economics formally in one of the greatest schools in the world, he's not prepared at all for the financial markets. So he decides to move to the new center of the world, leave London behind. He moves to New York City, where dreams are made of. He gets a job as an arbitrage trader, and he sets himself a goal to make $100,000 and retire. Now, that may not seem like a ton today for retirement, but keep in mind, this is like 1 billion years ago. And also interest rates on bank accounts back then were much higher. So you could literally put 100 grand in a savings account and just live off that. There's just one problem with his goal. He still sucks at trading. He moved, but he's still not good at it. So he decides to revisit some of what he learned in college. You see, in college, he was taught by the greatest economic professors at the time, the efficient market theory. And this basically states that markets tend towards equilibrium and that deviations from that state are random and caused by extraneous shocks. Or stuff is usually normal in the stock market because everything that could happen is already calculated. And unnormal stuff happens because of crazy events. This is a cool theory, but it sucks. It's just nonsense. It doesn't work. Like, there is no the efficient market hypothesis. It's nonsense. And George Soros was one of the first people in the world to figure this out. He hypothesized that finance is driven by two things: results, the real world, and expectations, our interpretation of the world. And he knew from Karl Popper that our interpretation is never perfect. And so the difference between our expectations and the results is where the trader can make profit. That's where alpha can be found. And guess what? He was right. He finally started to become profitable. And so by 1969, he's made $250,000. He is far past his original goal, but Soros doesn't stop. And you're going to see that becomes a pattern. There's several times when maybe he should call it quits, but he keeps going. So he raises millions from wealthy European contacts and starts his fund. He bets big on a new financial instrument called the REIT, the Real Estate Investment Trust. It's basically a way for everyone to pool their money together and buy properties. And so Soros actually doesn't believe in the REIT long term. He thinks that they're overhyped. He thinks that they're going to have a boom as expectations come in high, and then a bust as reality is inevitably lower than those expectations. But Soros wants to make money on both sides of that trade, so he goes long the REITs, and it works. He makes money when REITs go up, and then he shorts them on the way down and makes even more. And so by 1973, Soros is feeling pretty good about himself. His fund has doubled every year. He's now managing $50 million, which for 1973 is an absurd number. And by 1980, this has increased to 380 million. Oh my God, the poor kid from Hungary has come so far. Soros is special. He is on track to becoming the greatest money manager of all time. He is on track to becoming the Messiah that can save his people back home. And then, well, you don't stay on top for very long. Soros, it's big on bonds, not this bond, this kind of bond, the government bond. Basically, he thinks that the economy will crash due to high interest rates. And he's kind of right. This does come true, but he gets the timing all wrong. He mistimes it. The economy stays strong longer than he thought, and his fund loses $80 million. Half of his investors leave after this event. And so maybe it's time to retire. Maybe it's time to call it quits. You had a great run. You built your fund to hundreds of millions of dollars. You came from literally less than nothing in Eastern Europe. So he hands the fund off to his business partner, and he leaves the game for good. This is the end. He and his wife adopt 7 golden retrievers, and they live happily ever after. Until his business partner returns an embarrassing 9% 3 years into the fund, and Soros is dragged out of retirement. He's back in the game. It's time for him to turn the ship around, and he's taking bigger risks than ever before. The first trade he takes is he goes long on the Japanese yen and short the dollar. He's betting against the dollar and on the Japanese yen, and it works. He makes an incredible 150% return. It's ridiculous, but to accomplish it, he had to take out tons and tons of debt. Like I said, he's playing a riskier game than ever before. But things are great for now. And then you don't stay on top forever. On October 19th, 1987, there's an infamous Wall Street crash, the worst in the history of Wall Street. It's called Black Monday. This is what the Dow Jones Index looked like in a single day. And Soros is on the wrong side of Black Monday. He's forced to sell his stocks at discount prices far below the market price. So it's not even that the market crashed, it's that Soros has to sell his positions way below that because no one's buying at the market price. Yeah, so he's very sad. He loses 200 million in a day. In a day. I mean, this one day completely wipes out his return from the previous gains on the Japanese yen and the dollar. It just makes it negative. Now, he manages to make some trades later in the year that turns it around a little bit, but it's time for a new face. It's time to actually retire now. And so meet Stanley Druckenmiller. This guy is a legend. He deserves his own video. Maybe I'll make it one day. But he's a whiz kid who comes out of nowhere and he takes over the fund and he's going to manage everything. And Soros, now is time to dedicate his life to his charity, the Open Society Foundation. And this is where the controversy begins. At first, the Open Society Foundation is amazing. It funds opposition groups in the Soviet Union, especially in Hungary. It gives scholarships to dissidents and political activists. Their charities help to stabilize the transition between the communist Soviet state and the new democratic capitalist states at a time when there was a lot of chaos. So initially, this looks great for Soros. His childhood dreams of being the Messiah and saving his people are coming true. He's sweeping in to Eastern Europe with tons of money and funds, and they beat the Soviets back. They brought down the Iron Curtain. His people are free. Finally, maybe it's time to call it quits. But Mr. Druckenmiller approaches George Soros with an idea to get him back in the game. You see, Druckenmiller wants to short the British pound. This is basically because the Brits are having a very tough time. Not only do they have a trade deficit, they also have a budget deficit. The plan is simple. The Bank of England has to buy a certain amount of British pounds. And to do that, they have to sell their yen and their dollars and other foreign currencies. And so if, the price of the pound goes down and these two begin to short it more, so it goes down and they use that money to short it more, then the Bank of England is forced to buy. But eventually they're going to run out of foreign currencies to buy with. And so if they can sell enough of this, they can break the Bank of England. Well, in 1992, they take out a $10 billion short position, which is far more than what their fund had. They've borrowed billions of dollars to make this single trade. And the plan worked. They made $1 billion in a day. But Soros is vilified across the world. He is seen as a looter that is coming in and profiting off of the destruction of the British economy and the British people. And the Open Society Foundation is given a bad look as well in the years forward. Most notably, the Open Society Foundation has funded 2 extremely progressive district attorneys. On this one here is Chesa Boudin from San Francisco. On the right is George Gaston of Los Angeles. And these two are both incredibly good at letting criminals and murderers and drug addicts get away with more than what they should because they believe in very radical decarceration ideologies. And these are just 2 of the candidates supported by the Open Society Foundation. They've done tons more work like this. So he's vilified by the left for looting England, pretty much. He's vilified by the right for supporting ultra-progressive candidates. Soros believed he was the Messiah, but maybe it would have been better if he just retired with his 7 golden retrievers. Now, there's a free list of 50 plus finance and investing tools at the first link in the description. Go check it out. It's literally free, and subscribe if you want more videos like this. See you in the next one.